We are keeping a watchful eye on Ukraine, but as of now, it does not look like events will escalate to a point where it will start impacting global markets in the same way as it did in early March. So right now, we are more focused on the growth outlook globally and how that is evolving. Particularly, we'll be keeping an eye on all the data that comes out this week in terms of what direction it's going in. Also, the earnings season for the first quarter is, of course, underway in large parts of the globe, and so far earnings have been coming in slightly ahead of expectations. So that keeps us quite positive on the market outlook generally. Yeah. I think so. The Fed will probably continue to taper by another $10 billion of its asset purchases. The Fed is largely on a preset path right now, and it will continue to cut asset purchases by $10 billion at every meeting until it finishes around about October. The hurdle for the Fed to change its policy is really too large right now for it to consider any incoming data to be significantly altering the course of the economy. So as of now, we think they will again cut by $10 billion and they will leave the forward guidance unchanged. At the last meeting, they removed the language about the unemployment rate, and we think that will remain the case this time. Sure. What we found actually is that a large part of the tapering was already priced into flows about 6 months in advance. So if we look at flows into emerging markets, cumulative flows into emerging markets versus the size of the Fed's asset purchase program, and we find that the flows into emerging markets tends to lead the Fed's asset purchase programs, the changes in that by about 6 months. So we think a large part of what the Fed is doing right now has already been reflected in flows into emerging markets. We saw massive outflows in the second half of 2013, of course, and we think a large part of that was because the Fed was going to taper. Actually, we tend not to look at the emerging markets as a complete whole together. We think there are considerable divergences between the policy setups, between the growth outlooks of all these different countries, to consider them together as a basket. So within the global emerging market space, we are actually selectively overweight, but very close to neutral. Our overweights are mostly in Asia and mostly in the export-intensive North Asia. So we have overweights in Korea, Taiwan. We have overweight slightly against the grain in India and some parts of Eastern Europe.